Sarah, another tough day on Wall Street yesterday. Certainly in these turbulent times, you got to make sure you are financially fit. There's the closing bell. We were waiting on that. And so obviously you got to make sure you're financially fit. Stewart Welch of the Welch Group joins us on Monday, Tuesday to help us out with that little financial test for you. But before we get to that, are we looking at financial Armageddon right now in the markets, or is this just a little bit of panic?
Well, Mike, actually, the market's been moving up for about 3 or 4 years, so it's had a really strong run. And you would anticipate that at some point it's going to settle back. And I think this is kind of some natural settling back.
All right. Well, again, in these turbulent times, you want to make sure you're financially fit. We're going to take a fit test. We got 6 things, some 6 tips that you give us to make sure in this test. Talk about the first one. You got to have a minimum of 3 months worth of net paychecks in the bank. Explain that.
Well, I think financial self-confidence really comes from money in the bank. And so the question is how much money in the bank. And what I would say is you want to start with a minimum of 3 months of your net paycheck. And the more uncertain you are about your job, the more months that you should have in there. So if you're really uncertain, you might want to have as much as 12 months in there.
So really try to come up with a budget, sacrifice a little bit so you can come up with 3 paychecks you put in the bank.
I'm telling you, you feel a lot better when there's money in the bank.
All right. Are you contributing to your employer's retirement plans?
So you don't get to answer a yes to this unless you're contributing enough to capture all the matching contributions.
Okay.
But you want to be sure you're doing that. If you don't catch that matching contribution, it's like passing a $5 bill on the street and not bending over to pick it up. So you want to definitely do that.
What percentage, by the way? A lot of people get caught up on that. They're like, I don't know if I can afford that percentage to take out of my check for retirement.
Well, I think that we're going to come to that a little later in this quiz, but you want to be doing a minimum of 10% overall.
Okay.
Now, it might not all be in the company 401k plan, but in a lot of cases it will be, because that's one of the best places to do it, because you get a deduction for doing it.
All right, let's see if you pass question number 3 in this financial test. Are you paying your credit card bill off full every month?
So if you're not, if every month you're allowing that credit card to rotate, leaving a balance there, it's a sure sign that your house is not in financial order.
Okay.
And because credit cards are, even the best cards are usually you're paying around 11%, and the worst cards maybe 18% or more.
Right.
And in this interest rate environment, that just doesn't make good money sense.
No, it does not. All right, are your total debt payments less than 30% of your take-home pay? Wow.
Yeah, so this is just add up all of the payments that you make, including your mortgage and your car payment and any other debt payments. And if the total of that per month is more than 30% of your net take-home pay, then that's too much. And so you want to make sure that it's under that number. Ultimately, by retirement, your goal would be to be totally debt-free.
So if really extending yourself, and you're thinking you're working paycheck to paycheck and living that way, that's probably you're failing that question.
That's a sure sign that that's happening.
All right, number 5, are you investing a minimum of 10% of your gross income? We kind of touched on this a little bit already.
Yeah, number 5 is 10% of gross income, and that's from your very first paycheck. That's the first time you get out of college and you start working. You need to start saving 10%. And if you're not doing that, you are not on the path to being financially free. You're not on a path to having enough money at retirement. If it's 10 years into work and you hadn't done that, that 10% is probably a little more like 12 or 15%. All
right, we hope you're doing well in this quiz so far, because we come to question 6. Is your net worth on track? Now, here's where I'm caught.
Well, this is a big challenge, and let me just start with the end in mind.
Okay.
When you get to retirement, you need about 20 times your annual income in investment net worth, in money and investment. So let me give you an example. If your income is $100,000 at retirement, you need about $2 million, and that is a huge amount of money.
Yes.
It is a mountain that you got to climb, but that will allow you to make a transition from getting a paycheck on one day and not getting a paycheck on the next day at retirement, and having enough money bridging that gap to make it feel like there's not a big change. What you don't want to do is arrive at retirement and go from a paycheck to a Social Security check. That is not the way to spend your last 30 years.
And we know a lot of people on modest income, they've basically passed this quiz and become millionaires because they did it the smart way. Stewart Welch, thank you so much
Thanks, Mike.
for that financial test. All right, is obesity really a disease?